Okay, so here we are in the middle of October 2022. Oil has been locked in a pretty much a bear market for the last couple months. Unexpectedly, everything seemed to be bullish for oil. The macro picture, the domestic picture, the diminishing spare production coming out of OPEC, the Russian turmoil, Ukrainian conflict, all signals were pointing toward bullish. We got more COVID out of China and a stronger dollar rally, ironically, because of the energy situation uh, fallout in Europe. And together, those factors, the financial factors of the forthcoming recession, all formed the perfect storm to take oil much lower than a lot of the pundits were saying, which was about 80, 85, 95. Um, and so after about hitting 76, $77, a little bit later, OPEC made an announcement of a cut and seemed to put the floor in oil. Here we are at 87. Where are we going from here? Higher, of course. The diminishing global return, the global inventories eventually are going to trigger buys. I mean, it's got to be within the formula of the investment funds, hedge funds, what have you, to factor in these global inventories. And I don't know how low they need them to go to trigger the buy, but I guess they're on their way there because they've been decreasing steadily. There's the futures market is in backwardation, and it's caused the shale drillers in the U.S. to hold off and practice discipline. And OPEC's 2 million barrel cut wasn't even a cut, they said, because of all the shortage that they've shortages that they had with their production below their quotas. So you really have to wonder. There's going to be a time. It's possibly now. I think it's now, where the oil is going to get difficult to extract out of the um, OPEC producing countries. A couple of them will have problems because they've been blasting water down there for the past half century and depleting the these super fields, the largest of the large, and then they're going to have to move on to smaller fields, and it'll be more costly because of all the inflation that's taking place, and also the electricity will become more costly to run the pumps. I mean, there's a tremendous amount of energy that's required to extract oil as it comes, as you deplete the larger fields and have to move on to smaller fields. There's a tremendous amount of infrastructure that needs to be put into place, and with depending on the types of oil, the treatments that need to happen, the geology, the chemicals that need to be involved, methods of extraction and transportation, refining and processing. All those things need to be adjusted. It's not all uniform. This crude, a lot of different factors went into forming it over millions of years, so it doesn't all look the same. So it's getting complicated. It will get more complicated. It's becoming more difficult to generate the same amount of oil when wells are depleting and you have to move on to other wells, and you have to be mindful of the rates that you're pulling the oil out of the ground because of things like losing pressure and forming gas in the well, and depleting it to points where it becomes difficult to maintain production in the future. So, it's not like it's just turn on the spigot and turn off the spigot. It doesn't work that way. And obviously OPEC, if they are short of their quotas, you have to ask why. And I almost feel that they are cutting production to look like they're in control of the situation. So to kind of get ahead of it, ahead of the production figure. So you, this to me is the biggest event of oil price history. Is the inability of OPEC to maintain production. And once the market senses that OPEC is no longer in control, once the market senses that OPEC has lost its pricing power and the price of oil shifts then basically to, the open market type thing, right? Whatever's out there, then that's when you're going to see prices skyrocket. And because what's going to happen is the market has to build in this fear and like risk premium that isn't there at the moment, because if someone is withholding millions and millions of barrels a day, that's more than enough to tip the scales in and crash a price, severely. So if you don't have that power anymore, there's pretty much one direction that the price is going to go over, for the long term, it's going to be up. And the futures curve is pointing down at the moment. So really, I would expect to start seeing things level out and go up, because the future, it's just going to be harder and harder and harder to get away with an oil price in the 80s and 90s and even in the low hundreds as inflation creeps up, extraction costs increase substantially, and the amount of oil that being extracted decreases beyond the de facto peak, production peak that is occurring, that we're in the middle of now. Should have been about 2010, 2008, but the shale revolution occurred and just kicked the can down the road. And now the shale drillers are being disciplined just as much as they're probably having difficulties with the same reasons that I listed before going on in the Middle East and the OPEC countries. So the three major factors that will drive the price of oil to several $100s a barrel, in like 2020s, 2030s, is the shale drillers. The shale production is going to fall sharply, and OPEC is going to struggle to maintain production. OPEC, I think, will be less of a violent. OPEC has more of the risk spread out amongst different fields and different countries, so I think between all of the countries, there'll be ways to kind of absorb the diminishing production. But the Permian, the shale drillers are so concentrated in the Permian Basin, and they all face very similar challenges and similar timelines, and a lot of the fields will abut against each other, and all the hot spots that get sought after quickly, they're all going to be diminishing in tandem, because the way the information is leaked through the oil community, right? You'll have an engineer working at one firm and then he'll go to another, or you'll have geologists going through the public data from other drilling logs, and word spreads of what the hot plays are, and those are the ones that are going to get exploited. I mean, if someone's sitting on a big secret and then the secret gets out, do you think people are just going to sit there and hold on to it and wait? They're going to exploit the play as quick as they can. They're going to mobilize, and they're going to try to secure land and then mobilize and then produce from it. So, as the lucrative shale plays, I'm sure it'll be like a wave of them, and once that wave decreases, it's going to be drilling more and more wells, and when that happens, it's more and more of a steeper production decline curve. So you're going to have the shale drillers have that sharp decline, OPEC have that steady decline, and Russia. Something has to give with Russia. you know, they're fighting a war. They're getting knocked back. I'm not saying that it's gonna turn nuclear, but really, their economy. I don't know how it's going to avoid just such a sharp contraction. Does that directly impact the oil production? Is the billion-dollar question. How, to what degree? Don't I can't, they're likely to have production issues. I don't know if it's going to fall flat on its face, but Russia is still a wild card because until the data comes out showing, you know, huge hits to exports, uh, its net effect could be easily overlooked. But something I think has to give with Russia at some point. The between the sanctions and price caps, starvation of capital, something's got to give. So, if anything, shale, OPEC, but I would put Russia also in third as a to be determined um, driver for the you know hundreds of dollars price of oil. So let's see what happens, and hopefully no more dollar rallies. Long oil, big time.